Hello everyone, welcome to my lecture on Unit 4 Topic 6, Posting Journal Entries into Ledger. Ledger is a book that contains several accounts. The process of preparation of accounts from the journal to the ledger is called posting in the ledger. This is the format of a ledger account. It's a T-shaped account. On the top of the account, the name of that particular account will be written, and it is a T-shaped account divided into two equal halves. The left side will be your debit values, and the right side will be your credit aspects. So on debit side, the respective columns would be date, particulars, journal folio. It is just like an index, and the amount. Next, on the right side of the ledger account, the respective columns would be date, particulars, again journal folio, and amount. Now here we are taking the same problem, the same data for which we have passed the journal entries, so that it will be easy for you to understand how this journal entries are being posted into ledger accounts. So these are the journal entries which we have done in the previous session. Right? 8 entries we have done on 8 days of January in the books of Modern and Company. So these journal entries now will transmit into ledger accounts. Now the requirement or the procedure of entering all these entries into the ledger account will be started with opening up different accounts on each and every item that is listed out here: cash, capital, land, Kiran, sales, etc. The name of the item will be your account name. So all the respective on all the respective items, we'll open up the accounts in the above shown format of a ledger account. This is how it would be: cash account, land account, capital account, Kiran account, sales returns, purchases, purchase returns, Manoj, bank account, salaries, commission, and general expenses. These are all the items which we came across when we have made journal entries. Now let us move on to learn about the procedure, how we post these journal entries into the ledger book. To begin with the first one, let us take this first transaction, that is cash account debtor to capital account. So as we read this first entry, that is cash account debtor to capital account, the first account which we are going to select for posting the entry will be your cash account. Going to cash account, here cash account, here the date of the transaction, it is 2nd, to capital account 70,000. So cash account debtor to capital account. This is how one entry is passed. So for every entry there will be an equal corresponding, for every debit entry there will be an equal corresponding entry. Now we have made a debit entry, so the credit entry would be in the books in the capital account. So we now select the capital account, and here we are going to write it as, already the debit entry is done in the cash account. Now we are going to make a credit entry, that is the 2nd Jan by cash account 70,000. Okay, Now we'll pick up the second transaction and post it in the ledger. Land account debtor, land account debtor to cash account. So the land account has to be selected first. See here, land account debtor, land account debtor to, what is the date of the transaction? It is 5th, right? To cash account. $1,50,000. And again, this is a debit entry we have made. We need to make a credit entry also, that will be in the books of cash account, or that will be in the cash account. My land account, 1,50,000. Right? Or we'll select another. We'll post another entry here. Current account debtor to sales account. That is third entry, dated 6th. So first account that has to be selected is Kiran account debtor to sales account. Here. Kiran account debtor to sales account, that is on 6th, 15,000. Right? So again a credit entry has to be made in the sales account. Here it is. Sales account, it will be by Kiran account, amounting to 15,000. Similarly, we will be posting first. Next one is purchases account debtor to bank account. We'll move to purchases account. Here it is. Purchases account debtor to bank account. Right? So here debit entry is done. The credit entry would be in bank account now. Bank account by purchases account, 22,000. Right? This is how all the other entries also will be entered into their respective ledger accounts. Now we'll move on to the method or the procedure how to balance the accounts here. Now beginning with the first one. Here cash account. We'll sum up on the both sides, both debit and credit. So it is obvious, it is clearly seen that the credit side of the cash account is total is high comparatively to the debit side. So the total of here it is mounting to $2,05,000. So the same highest total we will put on the debit side also. We'll go by the highest total, and from this highest total you deduct the above items whatever they are present. So here only 70,000 is present here, so deduct 2,70,000 from 2,05,000. The remaining value figure will be 1,35,000 here. So this we call it as a balancing figure, and will represent it as to balance carried forward or carried down. Carried forward or carried down. So this is the balance figure. So this again, once this balance is account is balanced, you are going to make this entry. This is a closing figure, isn't it? The balancing figure or a closing amount. So this at the end of the period, this is the total. This becomes the opening balance for the next period. This is at the end of January, and at 1st of February 2012, the balance of this cash book, that is opening balance, will be by balance brought down. It is 1,35,000. Right? We're coming to the next account. Now here, land account, we have one entry on the debit side. It is 1,50,000. So the same total we are going to put it on the credit side, 1,50,000. There is no other item present on the credit side. So the balancing figure, how much we need to put it here so that the total becomes 150. It's altogether the entire amount. Now this is the balancing figure, what we call. Only then your account is balanced, right? We represent it as by balance carried forward or down, right? So this is the closing balance of land account at the end of January month. So this becomes opening balance for the 1st February. So it will be to balance brought down 1,50,000. Similarly, this one 70,000. 70,000 to balance carried forward or carried down 70,000 by balance brought down 70,000. We simply go by the highest total. So what is the balance amount here? The balancing figure, so that the total becomes 15,000 by balance carried forward or down to balance brought down 10,000 rupees. By balance brought down 15,000 rupees. By balance carried forward or down 5,000. This is the balancing of sales returns account. One to 22 to balance brought down 5,000 rupees. Next one, purchases account. The balance carried forward or down 22,000. That's the closing balance. The opening balance for the next period, next month, will be to balance brought down 22,000. Similarly, purchase returns account. $2,000. Next, Manoj account. My balance carried down or forward to balance brought down, it is 2,000. Bank account. $22,000 is the highest total here. We take the same 22,000 on the debit side and close the balance here. To balance carried down 12,000. So for February 1st, it will be by balance brought down 12,000. Similarly, the next account is balanced here. So brought down balance is 15,000 here. Brought down balance of commission received account, commission paid is 25,000, and journal expenses to the extent of 5,000. So all these brought down balances, whether on the credit side, this is brought down balances on whichever side it is appearing here, on the same side it will be entered in the trial balance. So the trial balance consists of both the debit totals as well as the credit totals or the credit values. So here, if bank account balance is on this salaries account balance is on debit side, balance brought down is on the debit side. So it will be appearing on in the trial balance, it will be the salaries amount will be entered in the debit column of the trial balance. So all these brought down balances or the figures will be entered into the next set of books of the accounting cycle, what we call it as a trial balance, from which we will be preparing the financial statements, that is trading account, P&L account as well as balance sheet. With this, I'll end up the session here. Thank you.